Ihr Lieben, jetzt kommt ein für mich persönlich wirklich ganz, ganz besonderes Highlight. Für die mich nicht kennen, ich bin seit 1,5 Jahren erst freiberufliche Moderatorin und ungefähr seitdem fragt mich mein kleines Töchterchen, Mama, wann kann ich denn endlich mal sehen, wie du moderierst? Darf ich vielleicht endlich mal das miterleben und vielleicht sogar auf die Bühne kommen? Und ich konnte mir jetzt keinen besseren Ort vorstellen und natürlich auch kein besseres Organisationsteam, denn hier beim Startupland sind alle willkommen. Also auch, wie ich sage, die kleinen Nachwuchsmoderatorinnen oder vielleicht die kleinen Unternehmerinnen von morgen. Und ich freue mich jetzt sehr, mein Töchterchen hier auf die Bühne zu bitten für ihre erste Anmoderation einer Session. Einen großen Applaus für Marie-Lou, bitte.
Ich bin Marie-Lou, 7 Jahre alt und ich kündige Lena an. Sie wohnt in Schweden und hat vor 6 Jahren ein sehr erfolgreiches Startup gegründet. Bitte einen großen Applaus für Lena.
Super, danke schön. So now you know what you needed to know. Thank you so much, and this is Lena. Thank you so much also for having this Nachwuchs-MC starting our session here.
I feel honored.
So as Marie-Lou was mentioning, Lena has indeed quite an interesting journey in the fintech space. So she is originally from Germany, now lives in Sweden, has started her own company 6 years ago, but before that, done quite a long journey with with Klarna. So she knows a thing or two about the fintech space that we want to talk about in this session. We also want to talk about what is quite interesting. How does the Swedish ecosystem compare to the German ecosystem? Because there's 1 or 2 things that we also kind of say about that, maybe things we can learn from each other, cultural differences. And then quite importantly, and this is of course the headline of our session, it always sounds so wonderfully glamorous, you've raised 60 million, expanded into 27 markets, but of course behind that glam there's always quite a tough founder story. There's those rough weathers and rough seas that we have to sail through, and Lena is going to share kindly enough what she's learned, maybe the mistakes that you wouldn't advise others to do. So let us kick it off maybe with that. The first maybe headline would be profitability versus growth and versus risk, because what I found quite interesting when we discussed beforehand, when I read your story, so during COVID you decided to step down a little bit in the sense that you didn't decide to go for full risk and full scalability, but to take a more slower, let's say, sustainable path, which is something we can also discuss this in the startup scene overall, but maybe it's becoming more of a trend than just burning the cash flow. But let's see, what did that make you decide to do that? And what did you learn from that?
So starting off, we're a payments business. We handle pay-by-bank payments. Mm-hmm. And payments, generally speaking, is a fairly competitive space, right? It's quite crowded, it's quite mature, is not hyped the way that AI is hyped right now, and it certainly wasn't in 2019 either when we got started. Mm-hmm. So that's why we basically took things step by step. So we didn't do a large initial seed round, but rather we did multiple smaller funding rounds of 10 million crowns or €1 million, another million. And then we realized that basically account-to-account is a very fast-growing space. Mm-hmm. And we started to realize that we had a lot of competition that was also coming up, so second-generation players like us, that were actually starting to raise significantly larger rounds. Mm-hmm. And that was the trigger of why eventually we did take the leap to do a larger round, mm-hmm. but we wanted to reach profitability first. So we're actually profitable before we did a Series A, so that was the 60 million that you discussed. And ultimately, I think what was the key driver behind that was that we wanted to be the masters of our own fate. Mm-hmm. And we wanted to make sure that we could decide on the best possible path forward at any given point in time. And we actually still have very much the exact same DNA now. Mm-hmm. So right now we're in a very, very similar position where we can target profitability again, or we could raise again. Mm-hmm. And we basically watch quite carefully what's happening in the market, both with regards to competition, but also the access to funding, because both varies a little bit.
Super interesting. What did you learn, especially in those times that were quite rough, I can imagine also, about yourself in the sense of having to make that decision of, how to, in what direction am I going to steer the ship? I think this is quite interesting also psychologically,
For sure. I think everybody has to find the model that works for them. So I'm a solo founder, so I don't have any co-founders. And I think that has pros and cons, because it does mean that you're quite alone. So what I did is I brought on quite a few people that I've worked with in the past. So we had a pretty senior management team. So many of them have been in payments for like 10, 15 years prior to joining the company. And I think that, personally, for me, that really helps, because then you're not as alone, really, because you can rely on people whose opinion you value. And if you don't, maybe they're not the right people for the job, ultimately.
Yeah.
And I think that helps. But yes, I think a certain amount of resilience and sort of being able to breathe easy definitely helps. And for me, I'm not a serial founder. My background is in payments all through. I have done literally nothing else for 15 years, in all fairness. And I think that was also helpful, both for me personally, but also for fundraising and for other stakeholders. So we operate our own instant payment network. So we're working with lots and lots of banks. Banks are not easy counterparts for startups. And spoiler, since we're in Germany, being a startup, having multiple bank accounts just after Wirecard wasn't all that easy either, to be honest. And then it helps if you have a background. And I mean, that depends on, of course, the business you start. You may or may not have a wealth of experience. For me, that was really helpful.
What may be some early warning signs that, let's say you've just raised, you're like on this crazy scale and growth path, where you would say, I would maybe revisit that strategy if I was a founder? Like, are there some keys where you would be like, maybe not burn it as fast as you had intended to, because you were just saying you're watching the markets like very clearly and very constantly as well. So it would be quite interesting also how to navigate that strategy.
So, of course, depending on the business model, but one of the things that I find is quite key is are you taking a product to the market, or is the market coming to you?
Okay.
And for us, both is true at the same time, because we have some markets that have really taken off quite quickly. We also have markets where we thought things were going to move faster, and they haven't. And in those cases, what we find is that growth isn't, or your growth efforts don't scale as much as they should, really, for you to have a repeatable sales motion. And if you don't have a repeatable sales motion, in my point of view, it's very hard to scale efficiently, because you just don't get the same sort of return on invest on your marketing and on your sales spend. And we've definitely had to adjust for this. Absolutely. So we've launched markets, and we got a few people on the ground, and it hasn't taken off as much. Then we've course corrected. Other markets have taken off faster, but that is due to the fact that we're quite spread out across many, many different countries, and that, of course, is not necessarily the usual thing. That's very payment specific. That you need to cover a fairly large amount of markets, or else you're a tough choice for larger customers.
Do you have some more strategies in place, especially for this international expansion part, where it's so hard because somehow you have to, still keep your own DNA at the same time? When you go into France, you cannot really come with the same company. You have to adjust. How do you balance that?
So, I think in our case, we have a product that's actually quite similar across all the different markets. So there's relatively little product adaptation that's being driven by the market. So in Pay by Bank, you can imagine there's different banks, yes, per market, but the underlying infrastructure is built so that it works all across Europe, which is really helpful.
Okay, maybe we need to stay by just explaining for those that don't know it yet. I saw that you had this, the numbers were showing that 75% know what Pay by Bank is, but not everyone. Maybe let's sit there first, and then we'll explain
what Pay by Bank is. Yeah, it's actually very easy. It's given for those of you that are German, you might remember a payment method called Sofortüberweisung. That was very much the original first Pay by Bank payment method in Europe.
Okay, got it.
I would argue, but essentially what it does, it allows you to use your bank account as a payment method at the point of sale.
Okay.
So at the checkout. So you basically click on Pay by Bank, you see all the different banks per market, you choose your bank, you authenticate a payment, and you've made it. Ultimately with us, what you've done is you've made a real-time payment.
All right.
Which we receive and then later on settle to the merchant.
So that only explains why culturally, there are other products that have a lot more, let's say, cultural drift and differences from one market to the other.
Or also infrastructure. right? So you alluded to Klarna earlier. I was very heavily involved in sort of Klarna's go-to-market across Europe. And there we had a huge amount of adaptation per market because every single market was really quite different in terms of the infrastructure that you needed for buy now, pay later. And in our case, that is simpler. But back to your initial question, I think what's made this hard for us, and I think that is probably something that applies basically all across, is when you're going into a new market, you typically have a new market, you're selling a new product in potentially a new category to new customers at a new price point by new people. That's ultimately like what this looks like, really, if we're honest.
Yeah.
And then it doesn't work. And then you're trying to figure out, what is it? Did I hire the wrong person? Is it the wrong vertical or use case that we're targeting? Is the market not ready? Or does the product need adaptation? And then when you try to do that across 5 markets at the same time, I think then you're in a real sort of go-to-market crunch.
It's like when the baby can only cry and you don't know why the hell, what the hell is going on. Okay. Okay.
I think that is one of the sort of the hardest aspects of scaling. And perhaps come back to learnings, I think that we probably try to do too many markets at the same time, in depth at least.
That being 3, 4 at the same time?
Probably 5 or 6, actually, ultimately.
That sounds like
and probably what we should have done is about half. Which doesn't mean that we can't have product. I mean, our product is available in many, many markets where we don't even have go-to-market capacity right now, but that means that most of the traffic comes from customers that are international, essentially. So, for example, retailers that have business across multiple markets rather than local customers, which will be the next level of growth for us.
Super interesting. Let's talk a little bit about fundraising, which you've done successfully. But I would love to shed a little bit of light onto that, obviously, that pressure that is coming with the money. And since, we are talking about rough weathers and sailing through those, how do you also go about that? Maybe that pressure of spending fast and going fast versus when we were talking at the very beginning, maybe you want to step back, achieve profitability, but that's not necessarily the intention of your VC. Is that in the negotiations already beforehand clear, or how did you go about that?
I think the better alignment you can get with your investors on that before you close the round, obviously the better. In our case, we chose investors that already knew the space really, really well. And that was actually the number one reason why we chose this fund. So we have 2, Dawn Capital and Headline, where Dawn is a big B2B SaaS investor based in London, and then Headline is a US/German fund, I would say. And both of them were really deep into the space, and I think that really helped sort of the general sort of alignment. But my comeback on this, because I'm also involved in a fund from the other side, is that I think that, most investors want to deploy capital based on the growth trajectory that the business shows them. So if you're coming up basically with a forecast that shows that you're going to grow 5x over the next 2 years, and investors buy into that, they're going to want to deploy capital on the back of that growth that you're presenting. Otherwise, they wouldn't be deploying the capital. So I think that, and I've said the same thing to my team, because what you're saying is really true. We also got that because we did this very large round, and we came from a base of profitability. So for us, the ramp up was super steep.
They're like, okay, let's go, girl.
Exactly. And sort of sometimes when the team felt like there was too much pressure from the investors, I typically would remind them and say, but look, this comes from the trajectory that we showed. If we don't believe in this trajectory anymore because we've hit a rough patch, one of the markets isn't taken off, or whatever, we're not seeing that sort of repeatability, then we need to have that dialogue. I think where this goes truly wrong is you're trying to fake it till you make it. You're still sort of trying to show like, it's going to hockey stick any minute now, because then of course they're going to continue to want to deploy. Versus I think actually good investors, when they see that you're not getting that traction, they will not want you to deploy all the capital because they know you're going to have to make the runway stretch up until the next round. Or else you won't be raising a good round, and it's not going to be good for them either.
And then you are really at a good trust-based relationship that is a platform where you can have that dialogue, where you feel, free to communicate, what's happening right now. This is how we feel about markets, and this is also what our decisions are based on to maybe slow down a little bit. But how do you, are there signals also? I'm always asking for signals, but there's so much ego at the same time. There's obviously them having a lot of pressure, that it demands for that chemistry. But how do you identify that chemistry?
I spent a quite fair amount, I think, with the people that we ultimately did the round with in the lead up to the round already. And I actually speak to them quite a lot in between board meetings too.
Okay.
And I think that really helps. Personally, I think that's a really good mode. Building a personal relationship and just talking things through is helpful. It probably is a little bit also about how you work as a founder. I prefer to be completely transparent and tell it exactly as it is. It's not always nice. Because I think any company, nothing's ever just go, growth. It just doesn't happen. There's always going to be times when things don't go well. And that's a really unpleasant conversation, especially, I think, when you have a really ambitious team that is sort of used to achieving and sort of shining, and then you don't. And you're actually not delivering on expectations. I think that's really tough. But ultimately, for me personally, I think I would always rather have that conversation than end up in a position where basically you're just drifting apart.
Super interesting. It's almost like dating, in order to, because everyone here, especially on this stage, was all about, being a marriage, and very intense marriage between a startup and an investor. And obviously, when you're dating, you want to see that person as much as possible in order to find out whether you really want to do that marriage or not. And then sometimes, just more meetings actually may sound time-consuming, but then you get to know that VC as well.
I mean, most funds want to get to know a business well ahead of the next round anyway, for this reason, because they want to see sort of where you are now, what the plans are, and then how are you delivering on those plans, essentially. But ultimately, what is also true is, and one of my seed investors said this to me before we did the Series A, because I was basically bouncing with him around the different funds we were speaking to and how I was feeling about them and what I'd heard about the people, and I'd spoken to some of the founders, all the stuff that everybody does, right? And he said to me, look, at the end of the day, as long as everything's going well and everybody's happy, there's never going to be conflict. Like, you don't really figure out where you have people until it's not going well. And that is probably true for relationships as well, as people show their true colors when things are not going that well. And that's certainly true.
Very true. I quickly want to stop here just to let you know that, especially for this talk as well, I'll be super, super curious to hear your questions. So I have questions for another 5-6 minutes. And we earlier also had this amazing and quite engaging, active conversation with the audience. So please already have your questions in mind, and then I'll open up the floor. Really looking forward to make this as interactive as possible, so that you can also share some learnings that, or let's say questions that I may not have, not being a startup founder myself, but that you want to see answered. So really looking forward to those. I want to speak a little bit when it comes to rough weathers and that sailing part. You were also writing lately about being a leader, especially when things are not going so well. What does that mean to you, to be a good leader when, things are, let's say, hitting quite tough times? How do you navigate that? What is advice that you can share to build that resilience?
One thing that I think definitely helps is having been through multiple journeys, one way or another, as a founder or not, because then sort of you have a better view on sort of how things actually feel from the other side, right? Because I think it's a fallacy to think that if you're running a company that you have a full view, no matter if you're 50 people or 150 or we're like 160 now, you don't actually know how people feel, because people won't necessarily tell you, obviously. And but if you go back and you remember how you were feeling when you were an employee and you were quite far away from maybe the management team, I think that's a really helpful concept to try and see, okay, what might people now worry about? What do I need to address? And I think just sort of trying to be open and also maybe a bit vulnerable goes a long way. I just did a session for our managers just like last week, and there were some concerns around some of the markets that we've launched. Are they taking off or not taking off? And I think sort of just saying like, yeah, I see this too. I think this is a challenge actually for us, but this is what we're going to do about it. And this is the plan that we have. And these are some of the assumptions that we've made. And these assumptions might be true. They might not be true. Either way, we're going to adapt to that. For that, basically, we got a lot of positive feedback from the team. I mean, just being kept in the loop and sort of understanding what's happening, I think is already sort of like you're halfway there almost in my experience. Then I would also say that everybody always talks about transparency. And transparency to me is not sort of having screens up that show all the revenue figures at any given point in time with all the customers, because I think transparency without context can be quite problematic.
Okay.
Because you need to be able to give context for people to understand sort of the bigger picture, because not everybody has sort of necessarily has access to that. So that I think that's typically the balance that you need to strike about sort of addressing things and being sort of open and honest about them, but not being overly transparent so that people that don't sort of necessarily get the whole context served to them freak out about it.
Yeah, I think that's quite true. I don't know if any of you read Reed Hastings' books, but he's also for radical honesty. And then sometimes I'm wondering, how much honesty do people really can take and want and is good for them? You know, I understand that side as well, but maybe you need to package things. I don't know.
Yeah, absolutely. I think it's a maybe unpopular opinion, right? Because you want to say, oh, everything is available to everybody. We're going to be fully transparent. Everybody can see all the data at any given point in time. But is that really going to be the best thing if you're not really getting sort of the backside of things? So, for example, I mean, we have one company in the portfolio in the investment company that I was speaking about, and they've switched off a customer recently. So all their numbers were going down. But they switched the customer off because basically they were driving so much specific product development that it was basically killing their entire capacity to innovate in the engineering organization. Okay. So it was 100% the right decision. But all that people saw in the office was a graph that was going down, essentially. So that's an easy thing that you can maybe explain, because sort of it was a relatively medium-sized business and you can go into the details of that particular customer, but sometimes there could be things that work that are not as easily explained. And then I think you need to strike the balance. But
super interesting.
That's at least what I try to do, but everybody I think has their own leadership style.
How else would you describe your leadership style? Is that also driven by, I was wondering, the ecosystem, since we wanted to speak about Sweden versus Germany as well? Is there some elements of that driven by the Swedish mentality, the Scandinavian mentality?
Probably. So I'm, as you were saying earlier, I'm German by birth, but I spent the majority of my adult life in Sweden. And culturally, Sweden is extremely open. For anybody that sort of has been to Stockholm, like everything is on a first name basis. Everything is super transparent in the country. So you can look up where anybody lives, what their salary is, what car they are driving, if they have a dog, if they're married, who else lives at. This is like, you can Google this. It's public data.
So much for the radical.
It's incredible. And I think that's, for Germans, that can be really, really spooky. Yes. Norway is the same, by the way. Sort of, it's a Scandinavian principle. Okay. But that also has its pros and cons. For FinTechs, it's fantastic because from an infrastructure point of view, it simplifies a great deal for product development because you can perfectly score any customer. Because everybody has a unique personal identification number that you can just ping via an API, and then you're going to get all of their data. And that's why you see so many great FinTechs coming out of Stockholm or out of Sweden. But it also shapes the mentality. And if everything is already transparent, there's an expectation that sort of you trust people, that there is consensus-driven decisions, that everybody is heard, and everybody is equal. That's also a very strong cultural principle. And for a startup, in a way, it's nice because sort of it makes for an open and I think, quite frankly, often a very friendly culture. But sometimes I think also you have to just say, okay, this is how we're going to do it, and that's the decision.
Full stop. We can't do the full democracy thing here.
Some stuff you can't discuss, forever and ever and ever. Like sometimes, it's just not efficient. Especially not if you're trying to move fast. Okay. And I think, so back to your question, I think I have both in me, like more of the Germans, like, okay, this is the decision, this is how we're going to do it. But then also the more Scandinavian approach that is more sort of consensus. Okay, I do want to hear what everybody sort of has to say about this.
Okay, super interesting. You were also saying about the Swedish market that technical innovation goes straight to the market, whereas in Germany we're a little bit more, let's say, conservative. What did you mean by that? I'd be curious.
So I think all of the Scandinavian markets, but Sweden especially, are fairly homogeneous markets. And that is, compared to Germany, something completely different. Like Germany is much more complex. I mean, in Sweden, you have around 9 million people. About 2 million live in metropolitan Stockholm. So if you're a FinTech startup and you're advertising something in Stockholm, you're already almost reaching 25% of the population. So you can't really do that in Germany, right?
Not so
and not at the same cost, at least. Well, also in terms of infrastructure, there's for FinTech, for example, there's a national identification scheme that everybody has on their phone. It's called Bank ID. You have a simple code, you punch it in, you can identify yourself everywhere. I mean, to basically any authority, any ministry, any online shop, whatever. And that is sort of a default login that sort of any financial services product can use.
That's crazy.
So that's also much faster. So there's a lot of things that just get fast-tracked.
Okay.
KYC is another, so the typical building blocks that you need for FinTech, they're just already there. So you're building basically innovation on a basis that is perhaps better because it's less complex than Germany or France, which I think is very similar from an infrastructure point of view, where you also have sort of a number of different providers that you somehow have to package together to get the same result, and it's typically not as reliable.
Counterfactually thinking, would you think that you would be where you're at now if you had started in Germany?
No.
No?
No.
Not possible?
Definitely not. I don't think we would have been able to launch quite as quickly, to be fair.
All right.
So no, we wouldn't have been able to do that. I would have needed more money, and I think the product wouldn't have worked as well. And in our case, I would also say that because of the fact that Sweden and Finland are super mature markets for pay by bank.
Yeah.
It's something that's very commonly used. We were able to tap into a much more mature market. Where here in Germany, like the Sofortüberweisung, has done some really, really good groundwork. But since it was acquired by Klarna, which I was part of that team, so that's where my idea came for, basically they have drawn back, so you don't see the brand anymore as much.
That's
so the
true.
category hasn't evolved as much as it has in some of the Nordic market, or even the Baltics. It's also very large.
It's super interesting. I'm looking towards the audience because I would be curious if we already have some questions. Yes, we do. And then my wonderful colleague is coming around with the microphone here in the second row.
Hi, thank you so much for all the insights. I want to touch base a bit on the product because I'm aware of Adyen, Stripe, Klarna, of course, and you just gave us a little hint about where the idea came from, but what was the initial idea to found the company? And yeah, I didn't know Brite, to be honest, before, so I would love to understand a bit more from the product side, because I'm a founder, I know Stripe, they're super expensive, so at the moment we don't use them, but yeah, super curious about that.
Very good question. Actually, that is the key word. Surprise is sort of one of the major drivers. So we don't really directly compete with PSPs like Stripe or Adyen because they're sort of, to us, they're more aggregators. We're an individual payment method. But the key, there's many benefits, but I think the largest benefits probably is the price. Because today, if you're handling payments, say that you're an international business across different markets, you have, especially in Europe, a pretty large number of payment methods that you have to manage. All of them are going to cost you typically more than 1% of whatever you're selling for, some of them significantly more. On top of that, you have things like fraud, chargebacks, all of which adds to that. You're going to have different settlement cycles from each and every payment method. All of that somehow needs to be managed, and that's a fairly complex game. And if you look at Europe, essentially, I would say you have, if you're trying to simplify somehow, you have two red threads that work across all markets. One is credit cards, also expensive, same issues. The other one I would say is PayPal. Also very expensive, very sort of strong login, of course, mechanisms, because they have a strong community that already has an account. But both of these are actually, from a retail point of view, quite painful. We speak to a lot of customers that say, look, I love PayPal, I never want to switch it off. I do wish that the share would be 10% and not 40%. That's something that we very typically hear. And the beauty of account-to-account, pay by bank, is because of the open banking regulation being a pan-European phenomenon, you can offer it in every single market. It's a European sovereign payment system, so it's completely independent from any kind of large US monopoly, duopoly, which I would say both the Visa, MasterCard, PayPal all fall into that category. So being able to have one single payment method that you can sort of add across the board and then get the cost of payment down, that's one of the biggest benefits. That we ultimately believe that online payments are too expensive still. And because the fact that sort of we have no middlemen, so everything that we have is our own build. So there's no partners in between the chain, which is typically what you have. We can work with PSPs as well, and we do, but then it's only us and them. There's nobody else, like no issuer, acquirer, et cetera, in the middle. And that's sort of the efficiency game. We can do both. So we do, quick background, we do both payments and payouts, actually. So for e-commerce, it's payments and refunds, but we can also do pure payouts. Everything is like typically within 10 seconds. And we do consumer to business payments, business to consumer, and business to business. So everything but B2B payments, but payouts, yeah.
Do another question? Let's see. Yes, here. Second round.
If I pay using Brite and using my bank account, like compared to credit card and PayPal, do I have any sort of buyer protection?
So we are a branded payment method, and we're always in between the consumer and the merchant. And every single merchant that we work with that uses Brite has been onboarded by us and is underwritten by us. So we don't formally have a buyer protection mechanism the way that, for example, PayPal or Klarna have it. What we do is, of course, if there's an issue in the transaction, we will always get involved. There's account-to-account payment business models or pay-by-bank business models that don't work that way. We don't believe that's going to scale, exactly for the reason that we think that consumers have this expectation. We believe that consumers feel like if something goes wrong with a retailer, they should be able to turn to the payment method. And if you're just a white label infrastructure, you're obviously not visible, you cannot take that position. And for that reason, we are actually branded so we can step in the middle. And ultimately, obviously, if we were to have a retailer using the service that continuously delivers bad service to their customers, we wouldn't work with them because it would create, just from a business point of view, it would create so much customer service errand volume that it wouldn't be worth it for us. So we're incentivized to make sure that all of our customers do things the right way.
Mm-hmm. I'd actually, because we were speaking about e-commerce earlier, so you're getting the different winds that going into the different direction, you can feel them quite strongly. And right now, e-commerce is under a lot of pressure with quite tough competition coming from the Asian markets. What does that mean for European founders and then for startups like yourself that are in this space?
So I think the go-to-market for a payments business that is targeting e-commerce as a vertical is radically different now compared to when it was 15 years ago. So when I started my career in payments in Klarna, it was at sort of this boom time, like around 2010, when essentially there was a big shift of offline volume to online volume. So my team was in charge of online acquisition and lead generation. So we were able to be, as a business, relatively sloppy with getting the customers on board because they were growing anyway. We had merchants that we signed up. There was like 5 people in a garage, and next thing you know, they were literally stock-listed business, just because there was so much organic growth. So if you look back at sort of all payment businesses that grew heavily during that period, I think you need to ask yourself how much of the growth was actually organic growth in the portfolio versus new sales. Now, to your point, right now what we're seeing is that sort of a lot of the retailers are stuck between a rock and a hard place in Europe, because on the one hand side, the marketplaces have a much, much stronger position. So think Amazon and sort of what it costs for you to sell via Amazon as a retailer. So that's sort of driving cost and pressuring margins. And on the other hand side, you have all the competition from Asia that is selling into Europe cheaply, like Shein, for example, and Temu and all of those. So the prices are going down on that side as well. So what we're seeing in the market is that like a lot of the retailers have issues showing growth. And that means that as a payment business, you can only, so you get more or less, of course there's exceptions, you get what you acquire now. And you have to work with that now. So if you're acquiring sort of a customer in SME, you basically have to break even on like whatever lifetime value you're expecting for them right now. You can't bank on them growing, and then hopefully that's eventually going to create sort of profitability for you.
Okay.
And sort of, I think that's sort of the key issue that we're seeing, and that's also what I hear from sort of all people in the industry that I talk to around growth and e-commerce.
Super interesting. To wrap it up, maybe your last advice when startups are now going through those rough seas and weathers, what advice would you want to share with them? How to keep afloat and above water?
It's hard to say because it's so many different points, but one thing I would say is that I haven't regretted many of the decisions that I've taken, generally speaking. I have had a lot of regrets around having made decisions too slowly.
Too slowly.
And I've waited too long.
Okay.
And so, for example, when you're spending and you're investing and sort of trying to scale the business, like holding on to something for too long until you're in a position where it's going to be really, really painful to make a change, I think that's probably been one of my biggest mistakes. And so what we try to do now is that sort of trust your intuition a little bit more. If you think something's not going to work, maybe try to address that a bit sooner so that you actually have options. That's a general sort of thing that we try to keep in the business, like really keeping options open and try to think a bit more long term, rather than hoping and praying it's going to work, which is sort of in the DNA of a founder, because you want to be optimistic. If you weren't, you probably wouldn't have started a business. And so that would probably be right now.
That's
for
a
me,
good one.
The number one.
I just finished reading Think Again by Adam Grant, which is a great book, which is exactly about constantly revisiting yourself, rethinking your own decisions. Are they based on old beliefs, or are they really accurate and based on up-to-date information? And as a result, you would have to, take on the consequences and act on those. So I think this is a really good book that I've just recently finished that I can recommend to everyone. Lena, thank you so much. That was such a fantastic last fireside session. Can you please give a big round of applause to Lena from Brite Payments?
Thank you.